Hello, everyone. The center looks fantastic. I can't wait to visit it. I'm Jennifer Byrne. I'm a general partner at Grit Capital Partners, an early stage fund based in New York. I flew in from LA, but we're based in New York and invest in applied AI in 4 sectors that we come from as founder operators. So fintech, commerce, media, and MarTech. I'm delighted to moderate this panel from 3 different perspectives here. To kick it off, I'd love to invite the panelists to each introduce themselves, and then we'll dive into what is getting funding and why in AI.
Okay, my name is Claire Lee. I'm a venture partner at Holstone Ventures. I also recently started a position at a neobank, which for those that don't understand what that is, it's basically a new bank that we'll be bringing to market that is digital first at the end of this year. So we're still in stealth, so won't talk about that very much today. Hopefully by the next time I'm here, we can talk about it more. So at Holstone, though, I just wanted to shed a light on what we're doing. It's very, very pertinent to what we've heard about today, because we focus on AI, artificial intelligence infrastructure for media, entertainment, and advertising. So if you think about it like the picks and shovels layer, not content-driven bets, like we don't fund studios, we don't fund movies. So we're funding the infrastructure that really powers the media and entertainment industry. So that's what we do at Holstone.
Hey everyone, first of all, this is awesome. Like from a startup perspective, coming out here, absolutely incredible. So I just want to say a massive thank you to the guys to start off with, and I think a round of applause because wow. All right. Yeah, so my name's Conor. I'm an Olympian. I'm with my 2 Olympic champion co-founders over here. I won't say they're British, right? Because maybe they're enemies. I'm only joking. We've combined 30 years experience inside high performance sport. And our job really, and our goal is to allow the normal recreational athlete, starting with swimming, give them our knowledge that we have learned as athletes and the support through AI to help them reach their fitness goals. So it's been definitely an interesting journey. Started with a more B2B model, moving now to a B2C model. Actually launching a waitlist today in literally like 5 minutes. So if you want to check out the website, check it out. If you're into swimming, yeah.
Great, and I'm Tom Kelly. I'm from Roscommon, originally, Ireland, but went to undergrad in the UK, worked in the UK for a while, and then was lucky enough to get a Morrison visa and come to the States back in the mid-90s. Ended up going to business school and then going into investment banking and moved out to Silicon Valley back in '99. And specialized for about 15 years in raising capital for startups. So basically finding good startups, representing them to the VC market or the hedge fund market or wherever we're going looking for capital, and then helping put deals together and helping those companies get funded. And then I transitioned from that about 10 years ago into just investing directly into companies. So I'm essentially an angel investor based here in the Valley, investing mainly into tech, software, tech businesses, a lot of software as a service businesses over the years, and more recently some AI businesses as well. So I've kind of seen, I came out here in September '99 when the dot-com swing was in full effect and lived through the dot-com crash and then the real estate crash, and now here we are with AI being the hottest new thing in town.
Great. So we'll start with the what's getting funded. Some of the headlines probably will sound familiar, but I was just reading that we just shattered investing records. So AI just shattered records last quarter with $242 billion, 80% of the total global funding in Q1 going to companies in AI. 4 of the 5 largest venture rounds ever recorded were closed in Q1 of this year. The frontier labs being OpenAI, $122 billion, Anthropic, $30 billion, xAI, $20 billion, and self-driving Waymo, $16 billion. So that's $188 billion, 65% of the entire investment dollars. So With that said, beyond those mega rounds, what from your perspective, I guess Claire and Tom, to kick it off, what do you see, what the phase that we're in now, what's going to get funded next, and what trends are you seeing?
Yeah, I mean, I guess I'll go first. We just came away from the Andreessen Horowitz Speedrun Demo Day, so I guess that's probably a very good indicator, pretty recent indicator of what we're seeing. There's vertical and then there's horizontal AI applications, and I guess the best way to think about it is horizontal is really anything that could be applicable in the enterprise that is really going to create efficiencies in any of the functions. So think about it as like a horizontal layer that just makes doing things easier. And as Declan alluded to, a lot of the time that's going to come down to repeatable tasks that can be done by somebody other than a human. And they are tasks that can be taken away and, done by an artificial intelligence or an automated workflow, essentially. Vertical is interesting because that's really where I think a lot of the current growth is at. I think there's two types of vertical applications that Andreessen spoke to. One, they said, actually augments human productivity and creativity, and the second essentially replaces the human. And so there's two types of these scenarios playing out in the enterprise today, and the majority of those are actually in the former category. So a lot of the hype that we're hearing around AI, displacing jobs is, I would say, somewhat kind of overhyped or embellished in that people need to evolve, and the workforce development is really critical here because we do need to change the job functions and the skills, and all of those things are going to change across the workflows. But when you look at it today, the majority of those vertical applications are being used to augment and help human creativity and productivity. So I think that's really crucial, and it's something that makes me feel more optimistic for AI, because I think it is having an outsized impact in certain industries. For instance, in healthcare, I think there's some really critical impacts that we can see in healthcare particularly, and in financial services, which is an area that I really care deeply about. And I think this could really help democratize access to, for instance, it could help a lot of people who are underbanked or unbanked. So there's a lot of opportunity here, but I just wanted to kind of highlight a couple of those recent stats that I took away from the Andreessen Speedrun Demo Day, which I found really encouraging. It was a really impressive day.
Yeah, and I agree with that. I think vertical AI solutions are particularly relevant right now. I think a lot of the generic horizontal solutions have been launched already. There's a lot of competition out there, but for companies that can find a specific niche of the market that they know a lot about, where they can automate some of the workflow or help those workers get their jobs done more efficiently, then focusing specifically on that vertical and developing something beyond what the basic LLMs can provide that gives you some defensibility, and quickly getting to revenue can get you funded. If you look at where the funding is going, 40% of the funding has gone to the frontier labs, so OpenAI, Anthropic, et cetera, and then you're seeing a lot go into other verticals like legal or coding automation or various types of healthcare or workflow automation.
Great. So I guess moving into maybe the why, what do you think the trends are that are driving now more towards this vertical increase in funding? And also, how do you see yourselves looking at AI deals and underwriting those deals in a different way or using the same parameters? How is that shifting from your perspective? Tom, if you want to go ahead.
Yeah, I think for me, I'm as an angel investor, I'm investing at a very early stage. So I'm often investing when it's just a very small team. There's no sales force yet. There's probably the CEO, a few co-founders, and they've got a solution. And so what I'm usually meeting companies that are coming out of an accelerator, and I'm typically not investing pre-revenue. So what I like to see is some industry expertise, some customers. They don't have to have a lot of customers, but just some proof that people are using the product and willing to pay for it, and a path to growing the number of customers quickly. Obviously, as the companies grow and they want to raise serious VC funding, they need to be able to show that they can scale the team and that they can scale the sales effort, and it's not all going to be just about the CEO and founders doing the sales and marketing efforts. But at my stage, I'm typically just looking for a good team that have a compelling solution and some early signs that people are willing to pay for what they've got.
And just to follow up on that, are there any questions that you would now ask a founding team that in the past you may not have asked?
Good question. I guess I guess just given the speed at which a lot of these companies are growing, I'd want to get a sense for how quickly they can ramp up the team and how quickly they can professionalize the company. Because I was used to investing when companies were growing 30, 40, 50% a year, and you were pretty happy with that. And now their competitors are trebling and quadrupling, and so an ability to scale quickly and get the backing you need and the people you need to scale quickly is important.
Yeah, it used to be we would look at a founding team and wonder, should we invest in this team? Can they build it? And now the assumption is pretty much everyone is building quickly, and so we're asking different questions ourselves. So Claire, how about your perspective?
Yeah, exactly. Exactly what Tom said. Okay, can you hear me now? Okay. I think the issue in media entertainment is very much about technology that helps the companies create, produce, measure, and monetize content, not to kind of generic AI creator tools, and I think Declan alluded to this, but we're very much like looking at companies that have founder market fit, which is a phrase that you'll hear if you're doing kind of very early stage investing like we are. Often pre-revenue, pre-product, pre-everything, which is really friggin' hard because you don't get to walk around with a crystal ball most days. You're really looking at the data. You're trying to trust your instinct. You're kind of looking at which, what background does this founder have? Like I met with a founder the other day. He's ex-YouTube. And he's clearly trying to go and fix a very big problem, but it's an audacious goal. And so the question is always going to be, does he have what it takes to really build that trust? And I think what you find in this industry, it's being disrupted big time. As we know, media is being disrupted very, very quickly right in front of us. So great tech matters, but I think what we've heard is access to customers, trust, integrations, and speed to revenue matter even more now. And the go-to-market piece, I would agree with Tom, is a huge piece because it really comes down to, does this founder have what it takes to go out and get early paying customers? And are those customers going to really validate and verify that you have a viable business? And just don't forget that about 90% of these companies fail. And in a lot of the early days of this adoption curve, this kind of hype curve, there is going to be a lot of failure, but out of that, I think, comes a lot of great innovation. And I'm really pleased to see so many entrepreneurs and so many creators, coming out and forming startups and really going after these big problems, which is great.
Yeah, and for us, just to add to that, we think more than ever it's domain expertise, understanding the sector, getting access to proprietary data or creating synthetic data, as well as understanding literally how to sell and win customers and keep them. Those are more important. So go-to-market is more important than ever, in our opinion. And so with that, great transition over to Conor as a founder, a domain expert who has a very exciting company. So what is your perspective on the landscape and how things are going for you as you start to engage with investors? What questions are you hearing? What's the founder perspective?
Yeah, it's great. I'm sitting here and I feel like we're ticking the right boxes, which is great. But I think what's really special is with AI, we can do a lot of learning. We can very quickly figure out what worked for similar companies in the past, and really whether that be strategy, go to market, whatever that looks like. I think we're in a really unique spot that, like you said, that we do know the industry, but we have that brand, right? And that is something that creates that moat that we like to talk about now in AI. With that, we can do a lot of that organic marketing without having to take on Olympian investors like the likes of Byrne had to do. So it's great from our perspective. But eventually then when we do want to take on that, investment to scale, then how do we get the distribution in the other sports? It'll probably be getting other, Olympians or YouTubers or whoever's within that space to really push that out. So I think distribution is going to be key to help build that moat, but also brand. That is something that can't be replicated, and it's just touching upon that augmented reality. From our perspective, coaching and community and sports is very human-led. There's a reason why people, would prefer to come and pay a lot of money to attend a clinic with all three of us versus going on ChatGPT to write them a coaching set. So it's really, touching upon that, but figuring out the real problems and validating that. As of right now, we can very quickly with AI spin up a website, get a waiting list, collect as much data as possible before even writing a line of code. So we're really informing the product before a product's built, saving us time, saving us money, and validating the issue. That's figuring out what that is, because is it loneliness? Are people moving away from, when they finish a 9 to 5, instead of going to the pub for a pint, are they going on a bike for a cycle or a swim? It's really figuring out, is loneliness the real problem? And I think someone touched upon earlier, the results of loneliness is depression. It costs the US, it costs the UK a hell of a lot of money. So is that the issue, to solve that problem? Or is the issue actually, people access to us, and that's something we're really lucky and fortunate we can figure out really quickly.
And so I guess continuing on that line of thought about probably one of the most popular questions you're getting from investors, which is, what is your differentiation, what is your moat, and how is that sustainable? So I'd love to hear your perspective as well as Tom and Claire's. That's more important than ever because the democratization of technology.
Yeah, I think product isn't a moat anymore. AI is not a moat.
Yeah.
And I think that's why when you talk about, just going back to the start, horizontal versus vertical, it's actually vertical's growing very well because it's the people that are the moat, not the product. It's the founding team. It's the Excel, it's the PowerPoint. It's how you present that, piece, and experts nearly are the moat in itself. So in a space like this, we essentially are like IP. I want to speak to Studio Ulster. How can we replicate ourselves here? At the end, I don't know where he is in the crowd, but that in itself is a moat, and that credibility. So yeah.
Yeah, I think in media, we're looking for products that are really, going to be sustainable, I think, in terms of the tech stack over a period. Things that are not fundable and look fundable, for instance, and this is a big kind of debate that you'll hear about, is services that are dressed up as SaaS, but don't have a believable path to software margins at scale, and therefore that's not really venture backable. And then, we are looking for products that are going to address areas around unresolved IP. We just talked about this. Consent, provenance, that's a big thing. When you think about trust and rights management in media, that's a big deal. And then the other one is training data. So we've got a lot of diligence and analysis on the market around these kind of areas. But I think just kind of to reiterate what gets funded, we just assume that the technology is going to improve. And the real question is going to be, is the company, and does this brand essentially, do they have a durable reason to exist as the technology improves? And I think that's a huge question for every investor, because the pace of innovation is so quick that almost some things are kind of outdoing each other kind of every week. It's very hard to keep up. But, you know, paid pilots, measurable revenue expansion, or savings, and then repeat usage tied to outcomes are usually the things that we're looking at as an investor. But I think back to, you know, what Conor was saying, you're really looking for the founder fit, someone who has a bold, audacious vision, and then has a background and maybe comes from that background, that industry as an operator, and knows what problem they're trying to solve, and then is just obsessed with solving that problem. And then AI, I think, enables a lot of these entrepreneurs go build that now at speed, which is really critical. So I'm very excited for Irish innovation and Irish entrepreneurship. And I think that we've seen this wave of fantastic companies growing up here. And with the diaspora, hopefully we can continue to invest in the next generation and keep that momentum alive. And I agree, we definitely need to invest in the cultural center. It's kind of ready for money. It's ripe for investment. I'm personally going to invest because I think, you know, we got to put our money where our mouth is. There's no point me saying, let's invest in the San Francisco Cultural Center. I live here. I have 2 children. I want them to have an Irish heritage here, and that's why I'm going to invest, and I hope some of the others in the room do as well.
And it looks like it's one more great place where Conor can swim.
Yes.
I love the pool they showed earlier. Tom, how about your perspective?
Yeah, I think just thinking of Conor and team, I think, you know, one big part of a company like that is going to be building community, and I think that can be a key defense and moat in the long run too. So it's part brand, it's part community. You know, one company I invested in 8 years ago was a company called Replit, which is doing really well as a vibe coding app these days. But when they started out, it was more of a, you know, we'll teach you how to code in the browser.
You're buying the drinks later then. That one did okay.
When they go public, yeah. So, but back then the tagline was "Come to learn, stay to build," and they built a community of people who just wanted to learn how to code, didn't necessarily have very technical backgrounds, and the key was you could go to replit.com and just go to the browser and start coding right away in the browser. You didn't have to know how to set up your computer or set up a development environment or any of that. But I guess my point is they built that community as the place to go to learn how to code many, many years before vibe coding became a possibility. And then as soon as OpenAI and Anthropic came along with the ability to quickly generate code, they launched an agent, and the revenues have just skyrocketed since then. So I think part of it is just build a dedicated community early on and be known as the premier place to go for that, for that activity, that information. And obviously, as users build with you and leave their data with you, it becomes sticky to go somewhere else. So even as competitors emerge, you just try to stay one step ahead of them.
So I can't believe we're almost out of time. So we're going to do one last quick question here. So if you had to write a $1 million check in the next 30 days, what type of AI startup gets funded immediately and what gets passed? Obviously, Conor's gets funded immediately, but aside from that, Claire, Tom, you want to chime in?
As an angel, I have to say I would quickly cut that into 10 $100,000 checks and diversify. So, no, I mean, I'm looking. I think I would just be looking for companies that have clear traction and some happy users and a team that looks like they can go the distance and are serious about it for the long term, not a quick let's flip this and move on to the next thing.
Yeah, what Tom said. I mean, $1 million turns into multiple small checks for Wholestone Ventures as well. Our average check size is probably going to be in the region of $350K. But we're going to grow as our companies grow, hopefully. So, the goal really for us is we'll be announcing that Fund 1 has closed actually in record time. It's oversubscribed, so we're very happy about that. And then we're bringing everyone together in June to basically launch the fund. So we've done our first 3 investments. We're poised to do our next 2. So we're busy, helping those entrepreneurs find customers, find follow-on funding, et cetera. So if any of you want to know more about Wholestone and our companies, let me know. They'd love to talk to any people in the room who have, a media and entertainment-related background, obviously. So we'd love to chat with you. And then on the banking and finance side, obviously, come find me. And, Jenn can track us down. But thanks for having us.
Thank you so much. And I do have a precedent where I organized a panel, moderated the discussion, and one of the investor panelists invested in the founder and then ended up buying the company. So just saying, it could happen again. So anyway, thank you, Conor, Tom, Claire. Thanks so much for having us. On to the next panel.